Rahim. So we are running a bit late, so we are trying to catch up. Yes, I'm very glad to see everyone. Some of people I have met before and seen. So the first session we thought will give you some idea about what are the current trends in Islamic finance and maybe what are the developments happening in the other countries. Please feel free to, if you have any question, feel free to stop me and ask question. We want to make it a more interactive session so that we can all learn from each other rather than just a boring lecture. So please do feel free to ask question. So I'd like to start normally with this thing. Many people think that Islamic finance is something only for Muslim countries and for Muslim. This is a chart which is done by, by IFSB. It is showing the countries in 3 different categories. One country which is a dark color, black color. These are the countries where Islamic banking has become systemically important, which means that it has reached a certain threshold. It has gone more than 15% of the total financial sector that we as a international community, World Bank, IMF, the regulators consider that this is a systemically important. Then you have a second set of countries with a bit slightly lighter tone. That shows that in these countries, we have in next couple of years, 5 to 10 years in medium terms, the way the banking sector, Islamic banking sector, participation banking sector is growing, will become systemically important. So if you see that these 3 countries, these are basically Sudan, Saudi Arabia, and Iran. The other countries which are, and then it also includes here Malaysia, Indonesia, Brunei, and then the other countries, Pakistan, and all these things also. Now the third category is with all the other countries where we have some form of Islamic banking or finance being practiced, but it's not like a part of a very, it's not a mainstream or it's not a very significant. Now, many people don't even realize, but you have practice of Islamic finance in the US, in Canada, in UK, and so forth. So in that sense, Islamic finance has really become quite a global practice. It's a very well-known thing. Even it made agenda of G20. If you look at the communiques of G20, you would not see the word Islamic finance there, but you will see some reference to asset-based finance. When you look at those communiques, you will see that the G20 will make an effort to enhance asset-based finance, and so that is basically they're trying to refer to Islamic finance. Now, this thing was started out by Germany, but then during the Turkish presidency of G20, it continued, and then it has continued in other presidencies. So again, the point here is that do not consider Islamic finance as a local phenomena which is limited to Islamic countries. It has quite a big global presence. Now, just to give you some idea of history of modern Islamic finance, as you know that Islamic finance has been practiced from long before it was, when Islam came, form of trade and all the finance was done according to the principles of Islam, but it was then not called Islamic finance. There was no concept of finance and so forth. But more recently, last 100 years or so, people started to talk about it more, and it came back again. If you go back to the history, in very early 1900, I think 1902, Barclay Bank opened a branch in Egypt. And that was the first time people questioned whether this form of banking is compliant with Sharia or not. But people did not pay much attention to it, most because many Muslim countries were part of a colonized, and they did not kind of, this was not a very important issue till the modern commercial banking came into play. 1950s, you will see that people start writing about, they didn't write about Islamic finance as such. They were writing about Islamic economics. They were saying, just like people were concerned about economic and social justice. They were saying that this capitalist economic system has some, flaws and some issues, and it will lead to, and they were right, because now we do see that it's quite a growing inequality of income and wealth. So they started writing about it, but again, nothing happened. By 60s, you had many countries started to get, liberalization from colonialism and independence. In 1968 or mid 1960s, they had a first kind of a effort in Egypt. There was a kind of cooperative being developed for poor people. In Malaysia, there was a fund created, Tabun Haji, to promote, to finance the Hajj, and they said, how could you save money for Hajj if it's the savings are not Sharia compliant, invested in Sharia compliant way? So that was the early examples of some of these things. And I think there were some cooperatives in India as well. It was not till 70s when you had the oil came, a lot of money came, and people, in the Middle East started to see that they want to have a banking which is based on principles of Sharia. First Islamic bank called Dubai Islamic Bank was established as, I think, 1974, and then Islamic Development Bank was established in 1975, and then you started growing commercial banking. At that time, nobody thought that you could create a banking without interest, but gradually the Islamic banks came. They had some ideas of how to do it, and then gradually it picked up. 1990s, we saw Islamic funds started to come, investment banking came. I myself was first time introduced to Islamic finance in 1995, I believe, 94 or 95, when I was a graduate student. And I remember at that time, the market size was about $50 billion or $90 billion. And I thought, my God, it's such a small market, it will never, reach. But now it is have quite a large market. And then in 2000 we started to seeing Sukuk coming, capital markets product coming, Islamic finance going to other countries, and so forth. So this is a very short history of it. In last couple of years, there has been quite a big transactions done by non-Muslim countries. UK was one of those which was established, which basically they had a Islamic mortgage bank and Islamic commercial bank, but they also had issued a Sukuk back in 2014. Actually, they were looking at Islamic finances even early 2000s, but then the financial crisis came and they kind of slowed down. But they were able to then issue a one Sukuk. Islamic bond, and that bond was highly successful. It was oversubscribed by 12 times, 11 or 12 times, because the reason was that was market was looking for a high quality sukuk with a well-rated sukuk, and UK did that. We had other cases. Luxembourg has issued, Hong Kong, one of their municipality issued a sukuk. Hong Kong has done it, South Africa, and Russia had opened recently last year a participating banking center. So, just to give an idea that what the trends are in other countries. I will go over some market trends and then show you how the Islamic banking works and discuss a little bit of regulatory supervisory environment. We have another session, full session on regulation, so probably I'm not going to spend much time, but then give you some idea of how Turkey compares with the other countries in terms of development of Islamic finance. Now, uh, in a sense, today, if you look at this size, the market is almost or slightly above $2 trillion. Okay, so I was telling you that back in 1995, it was about 90 billion. Now it is 2 trillion. And out of that, you have mostly the banking is the dominant sector, about 1.5 trillion. Then Sukuk is the second largest, is about 342 billion, but this is outstanding. This is not every year's issue. Then you have about 66 billion in the fund, 38 billion in Takaful, and then you have quite a bit portion in non-banking financial sector or other than the banking financial institutions. These includes Mudarba companies, finance houses, microfinance, and all that kind of a thing. Now, so by 2015, we have $2 trillion is this thing. By 2021, the forecast is that market will reach by 3.5 trillion, okay? And then there are about more than 1,000 financial institutions, about 1,300 financial institutions in 2015. So that gives you an idea of how the market has grown. And I will show you in many countries, the market has grown much faster than the conventional banking. This tells you with comparison that how these are in terms of different countries. By law in Iran and Sudan, all the banking sector is supposed to be Sharia compliant, so they're 100%. But other countries, like you have this line, which tells you whether if you cross 15%, so these countries are more where you can say these are systemically important financial sectors. So idea of systemically important is that if the shock happens in that sector, it's going to affect the economy, it's going to affect the whole financial sector. By the way, that also reminds me, just about 2 weeks ago, IMF issued a very important major paper talking about the IMF's involvement in in Islamic finance, and they also look at from a stability perspective, and they plan to now include Islamic banking in their analysis, in their financial sector assessment programs, and in their future work. So that is again a very good development. And these are some of the countries where it's basically coming close to systemically important and touching. Now, Turkey has current, I think, market share is about 5.6% or close to 6%. And the total, I think the size is about 40 billion. So in terms of the dollar volume, it is in top 10 or 11. But in terms of share of the market, it is still quite low as compared to the other countries. Now, you know, in general, this shows you the growth of every different sectors. I don't know how good you can see the slide, but it shows you the sectors. Pretty much the same thing which we were talking earlier, that current size is about 2.2 trillion, but expectation is that it will go to 3.5 trillion. But out of that, major portion is the banking sector, which means the banking sector is going to grow faster. And then you have a good size of Sukuk and Takaful, which has a more potential of growth. If we look at the banking sector or different sectors by each region, of course, mostly Islamic banking or finance is dominant in the MENA region and the GCC countries. I do remember that, I mean, this is a more recent charts, but I do remember about 2 years ago, GCC had a higher share than MENA, including GCC. But now the trend is reversed. Now the MENA itself has a higher size than the GCC, which shows that GCC, which is oil-rich countries, are now even less than what the rest of the Middle East region is. The size is growing, and then followed by the Asia. Asia includes, of course, mainly Malaysia, but it also includes Brunei and Indonesia. So in that sense, if you look at it, that you have mainly GCC countries, MENA, and then Asia. And then, Africa is a little bit, not much, slow. That is growing up, but still relatively concentration is in the MENA and the Asia region. Now, if you look at this is on the banking sector. If you look at the Sukuk side, Sukuk is the other way around. Sukuk has much bigger market in the in Asia, because of Malaysia's market, but it has a less market in GCC as well as MENA. So if you add both of them, GCC and MENA, both of them less than the Malaysian. Now, one of the reason is that the Sukuk market in GCC is still relatively young. And other thing is, many of the Sukuk issued in GCC are kind of over the counter. They are not even, they're not traded, they're not listed, so therefore it's difficult to account for those. But this is the main thing. Then again, if we look at the Islamic funds market, big market in GCC, very little in MENA, but reasonably sized in the Asian countries. If you look at Takaful, again, big market here in GCC countries, mainly in Saudi, and growing market in the MENA region, whereas the Asia doesn't have that big of a size. So that gives you a good idea of this thing. Now, one thing I want to bring your attention, look at the Islamic funds. These funds shows you size in Asia, GCC, and then it has quite a good size in others, okay? What are these other countries? Other countries, of course, there are these funds which are in UK, US, Luxembourg, and so forth. I mean, I know in the US there are 2 equity funds, basically equity funds, there are some Sukuk funds. So these funds are being offered in the other countries by different fund managers. And funds comes in a different types. They are commodity funds, equity funds, leasing funds, receivable funds, and so forth. Now, if we look at the growth of banking sectors over last, this gives you about 4 years from 2011 to 2014. You could see that many countries have, like Saudi Arabia has an average about 15%. At Saudi, it tells you this color is a conventional dark color and the yellow color is Islamic. So that shows that Islamic assets on Islamic banking grow up 18%, but conventional side grew only by 7%. So that shows a huge growth rate. Similarly, if you look at Malaysia, Islamic products grew 4%, conventional only 1%. In the Qatar, again, if you look at it, the Islamic banking assets grew 20%, whereas the convention 7%. Only in Turkey, although the last between 11 and 14, the growth rate was 6%. Only in last 2014, it had a negative, and that was mainly because of FX fluctuations. But you can see that even in Pakistan, you see that it has a 10% average growth. Islamic had 19%, and conventional only 8%. So, if this growth was only in the only kind of shown as a Islamic, one can say, but you could see that consistently. Look at Bahrain, Pakistan, Indonesia, Saudi, Kuwait, Qatar, all places, the Islamic assets have a higher growth than the conventional. So that tells you two things, at least, there are two things. One is that there is a growing interest. People are having more confidence in participation banks. They have better, they want to get more, they feel comfortable with it. Second thing is that probably there are more people who are coming into the market which were not earlier because they thought that they wanted to do business based on Islamic principles. And maybe the third factor could be that there is switching taking place, people switching from the conventional banking side to the Islamic banking side. So this gives you a very positive optimism in the sense that you have that Islamic banking assets are growing in several countries, and they also also indicates probably they are better in their service, they're better in their products or something. Another comment I want to make here, maybe one of the reasons which could be because of this high growth, is that during the financial crisis, many conventional banks were exposed to those toxic assets. But Islamic banks, because they work on asset-based finance, they were affected less by the financial crisis. Although they were affected by the recession after the financial crisis, but they were not directly impacted by the financial crisis. There was a couple of papers which came out, including one from IMF, indicating that Islamic banks were more stable during and after the financial crisis. Again, this is a very positive and good news of building a confidence that this form of banking is a bit more stable. Any questions so far? Anything which you have? Okay. If no, we can continue. Okay. Now, I want to talk little bit of theory. Now, I know that I think most of you are from participation banking sector, so probably you all know everything, most of these things. But I thought I can give you a little bit different perspective, a different way of looking at things. Now, if you ask anyone, I think even what in Turkey you say hoja, if you ask any hoja about Islamic finance, they will say, oh, Islamic finance is something which prohibits interest, okay? If you pick up any article, magazine, newspaper, they basically say, oh, Islamic banking is the one which prohibits interest. Now, thing is that is fine, that is a kind of good start. That's right, that Islamic banking does not get involved with interest. But we as economists, as a financial economists and financial engineers, we look at things differently. Just prohibition of interest does not make much, the similar prohibition is in other religions as well. There's more to it, more to Islamic finance than just the prohibition of interest. So what we see this thing, if we look at what is the theory behind whole Islamic economics and finance, we need to understand from very basic foundation. Before even we get to interest, we need to understand, or at least we need to acknowledge that there are some very philosophical, fundamental differences when it comes to the whole idea of the wealth and the money and the property rights, the contracts and all these things. And again, here we are not going too much into philosophical, but these elements, these rules do impact the financial sector. One of the very philosophical thing is the role of money, okay? As you know, in conventional economics, money can be rented, money is a commodity. In Islamic finance, money is not a commodity. Money is only a medium of exchange or a unit of account. You could use money to, represent value of something. You can use money to indicate what is the, how to compare two things. But money itself does not create money. Money itself does not act and is not a commodity, is not an asset. That's a very fundamental issue. If you, I'm sure you must have read all your in your undergraduate economics courses, and they were telling there are the four factors of production, and every factor of production has a certain reward. And for capital, which they consider as money, the rent is interest. I mean, that itself is a very fundamental difference, whereas in Islamic finance, money itself doesn't make sense unless money becomes a capital, but money itself cannot be rented. So, there are some fundamental ideas. Second thing is, Islam, as I mentioned, that earlier people, economists, when they started writing in the 1960s or so, they were tackling this issue as an issue of economic and social justice. They were not attacking interest or something. They were attacking capitalism at that time. And so, earlier communists had attacked capitalism, but, Islamic economist people have attacked the basically fundamental problems with capitalism. And the idea was that it's less economic and social justice. Now, if we look at today into 2017, if you look at what we have learned in last 5 years or after the financial crisis, so many papers have come out showing that in the globally, in the world, the income inequality is increasing. Although the overall the growth is high, but the income and the wealth disparity is increasing. And that we as a World Bank are also very concerned that what is the reason that there's a growth, but the growth doesn't trickle down to poor people. So these issues of economic and social justice are addressed in Islamic finance in a different ways. So it has, for example, these instruments of redistribution, which allows, better, more just economic system. Then we come to prohibition of interest. Now, prohibition of interest is very interesting. As I said, that this is not only in the Islamic concept. The prohibition of interest also exists in Judaism, Christianity, and other places as well. Now, I think over here is we as economists say, okay, when you say prohibition of interest, what does it mean? What is the rationale? What is the divine rationale in prohibiting this thing? And thing which comes to our mind is that actually the prohibition of interest is because of money cannot be rented, first thing. Second thing is it's a prohibition of creating a debt which is not backed by something, it's just a simple IOU, simple debt, okay? And as economists, we think more about it, it has a very very deep implication. Actually, that prohibition of debt is to prohibit leverage, okay? Which means that you cannot just rent money, create leverage, and then continue doing your business. And if we now look at it more, we understand what is happening in the financial system. If we look at all the financial crises for last 400 to 500 years, debt is the culprit of all those crises. If you look at the whole, every time, basically, when a debt is given, which is not backed by a real economy, when it's just a pure debt, renting of money creates leverage, and that system becomes unstable, and it has leads to instability. So that creates a crisis. So I think, we have a good theoretical explanation of probably why in riba or interest is prohibited. Then you have a typical issues of gharar, which means information symmetry and everything. So the reason I'm emphasizing on this thing that a lot of people, again, this I'm giving you the misconceptions. A lot of people think that, oh, Islamic finance is just these religious people who are telling you, oh, don't do this, and this and that. But you know, if you understand and try to look at the whole system, it has a very solid, rich theoretical foundation. That this financial system has a good, sound foundation based on very strong principles, which could lead to a more stable financial system. So it's not something which is out of blue, doesn't have a, any theory behind it, or just because a mullah said or hoja said. No, it has a very strong, theoretical support. And other thing is what we understand all this thing, that if interest is prohibited, how do you do finance? And that takes us to this last top portion, which says basically do a finance which is risk, where you share the risk. You share the profit and loss, you share the risk and everything. Again, giving you the references that many great thinkers in the conventional finance are also now pushing for risk sharing. Professor Robert Shiller is well known. He has been talking about risk sharing a long time. Many people are talking about asset-based finance, project finance, and these things. Even, as I mentioned, G20 is talking about asset-based finance. So just to kind of recap that, do not reduce Islamic banking only to prohibition of riba. There's a much more other principles behind it, and it has a sound theoretical, background. Any question on this? This is probably the only theoretical thing I'm going to discuss before we move on to. Any question by anyone? Any comments? Okay, good. Let's get to the. So the question is, how do you set up a banking sector without interest? Okay. People think that, oh, how could you do without, capital needs interest, and capital has a certain reward and all this thing. I mean, Islamic economists do not deny that capital has a reward, but capital has a reward based on the risks you take, and you try to be more fair between the borrower and the lender. So what they do is that we mentioned about prohibition of debt and leverage. We talk about risk sharing, and main idea is that the finance has to be linked with the real sector. One of the main main reason for the financial crisis was over-financialization of economy, which means that you have a small economy base, but you create a huge financial system on top of it, that it becomes unstable and tilts one way or the other way. So main idea is that as long as the finance is linked with the real economy, close to it, it will be a more stable economic and financial system. So we talk about materiality, making more asset-based or asset-backed finance. I mean, there's quite a bit discussion about Islamic, asset-based or asset-backed. I mean, for the time being, as long as the financing is really linked with the financing of a real asset, I think that should be okay. Whether how much it is, how close the relationship is, that I think depends on any local laws and all these things. Now, another element I want to mention is that in the West, let me put it this way, in the conventional system for last 10 years or so, there is a trend of group of investors. They are saying, we will only invest in socially responsible investments, which means that they do care about certain very basic things, make sure that they do not get into certain sectors which they think are not good for the economy. They do not even get into the areas where they have a thing that maybe it has degradation of environment. They don't get invest into many areas. So there's a commonality between what Islamic finance is proposing versus what the socially responsible investors want to do. And now there's another trend coming up, another name coming up is called responsible finance, which means that whatever finance does, it has to have a bit more responsibility on it. Imagine, I'm just giving an example, that, imagine that if Greece was, not given all this debt. Where did that debt go? That debt did not create any new assets. It just kind of was a pure, single debt. So if Greece was not given a debt, it was given more financing based on the real assets, probably they would not have been in this crisis. Now, okay. So another thing I was talking about ethical financing. I don't want to give an example. There are these funds in the US called Lutheran funds, Roman funds, green funds, or many of the university programs. They will not invest in certain areas. They will not invest in the alcohol. They will not enter even in tobacco, gambling, prostitution, defense, and they will not invest in these things, which are all ethical things to do. So if you have all these funds, and on top of it, you put one more constraint saying that they will not invest if you have interest-based debt, then suddenly it becomes Islamic. So the point we're trying to make here is that even you have these, in the conventional side, you have ethical investment taking place, and that ethical investment, if those also add a filter or a rule that they will not invest if you have a heavily debted, then it becomes an Islamic. So there's not much difference from there. Now, Islamic financial system is not just one thing. I think we talked about it. It has quite a bit different sectors, subsectors, which are all growing. You have banking, capital markets, money market, then takaful, microfinance, leasing, project finance, and private equity, and so forth. So it's not just a banking. It is growing as a full, large system providing different services. Now, I think you all know about these things. These are all different contracts. So think of Islamic finance as a financial engineer, which has these different building blocks, and you can put these building blocks together and to build another product. And I hope that today and tomorrow you will learn different products which can be put together and mixed together to create a more complex financial banking sector. Okay. Now, I just want to talk about, how Islamic financial banking happens. Now, first of all, I think the word banking is very misleading for Islamic banks. Because banking somehow historically has this understanding that, okay, I put my money in the bank, my money is safe, and then I get a certain return on it, okay? Now that is a traditional understanding of the banking. When you call Islamic banks, here you have a different kind of financial intermediation. At the end of the day, it's an issue of intermediation, but participation bank or Islamic banks are different. So what you do is that just like other conventional banks, you have demand deposits, but then you don't have a plain deposit. As you know, that plain deposit is nothing but a loan to the bank. In a conventional banking, when you put money deposit in a bank, if you look at the legal documents, it is a debt. You're giving them loan. You're giving money to the bank as a loan, and the bank promises you to pay back some interest, some rent on it after some time, irrespective of what happens on the asset side. You can go and look at the legal document of deposit, and that's what that is. Compared to that, Islamic banks do not take the deposit as a debt or as a loan, as a liability. They say, we will take your money and we will invest based on our own skills and best of our efforts and whatever we make money, we will share that with you, pass it on to you. So in that case, the depositors are not the lenders, depositors are investors. So that's a very big difference between conventional banking. And that's why I personally think calling these as a banking, Islamic banking is not the right thing. They're more of a Islamic asset management, okay? And then of course they have capital. On the asset side, they have different portfolios, small books or whatever you call them. They have mostly the trade financing, lease, mudarba. Then they have musharaka, mudarba, some, now because of sukuk, you can have a securities investment, and then you earn some fees, money from, typical banking services. Now, what are the key highlights, features of this kind of financial intermediation? First is that depositors are the investors rather than lenders. We talked about it. They do a risk sharing through profit and loss. Now, again, I mean, I can even, I can bet you a lot of people do not understand the banking, even on the conventional side, if you are doing a very prudent investments, although it says profit and loss sharing, but if you are doing a very prudent investments, you know where the money is being given, it is all based on the real assets, then the chances of loss are minimized. You cannot have the loss if your assets are safe and good and well secured. So although people get scared by saying that, oh, I'm putting money in profit and loss basis, but I think they need to understand that, okay, if my banker is good, my banker is putting money in the secure assets, I'm willing to do profit and loss sharing because I know the probability of loss is very small, okay? And people also have losses in the conventional banks when the banks fail. So in that sense, profit and loss may be a bit scary to depositors that, oh, I might lose my capital. But if they have a confidence that my banker is take good care of my money, they would not be worried about the loss as such. And plus, if it's well regulated and regulators are watching the banks, then it's not. I think the biggest highlight of this kind of banking is that the assets and liabilities are matched. As I mentioned earlier, that throughout the history, the main cause of bank failures have been asset liability mismatch. In a case of a conventional bank, when a depositor put money in the bank as a debt, that creates a fixed liability. But on the asset side, if you lose the asset, then you cannot pass that on to the depositor. You still owe depositor, so you got a double loss. You lost the money on your asset, and then you still owe the money to your depositors. Therefore, many banks historically look at in the US, savings and loans, Lehman, all these things, they defaulted because asset liability mismatch. And that is the one thing, although theoretically it should not happen in Islamic banks, but some of the practices of Islamic banks can lead to asset liability mismatch as well. But theoretically, Islamic banks should have a pass-through mechanism which minimizes this asset liability mismatch, which means that it makes them more stable. Other thing is, rather than the investors focusing on ethical and socially responsible, since the operations of the Islamic banks are reviewed by Sharia scholars, therefore, it is inherently ethical and socially responsible, which means that, they have already talked about where sector you can invest and what you can do and all that kind of thing. So this is basically, overview of how a typical Islamic bank will work. Any question, Anif, so far? Okay. Now, let's move on to the next one. Now, this is again so just as balance sheet of Islamic Bank, this is much more detailed. You could have demand deposits, you have investment, different kind of investment account holders. You have, they're all taken on a mudaraba basis, which is asset management. You may have a special investment accounts, which is basically specialized funds. You could have create a special investment, they are called restricted and unrestricted. So it all depends on how you call them. And then you have the asset side, we talked about, you have leasing, profit loss sharing, and other things. Okay, very quickly, sorry, actually, how much time do we have? Huh? Okay. So let me talk about regulatory and supervisory environment. Many people think maybe nobody is looking at Islamic banks or whatever, but over the last couple of years, there has been developed quite a nice, what we call ecosystem, which means that it has a nice, whole framework, regulatory framework, and all these things is developing. I want to show you who are the key stakeholders in the in Islamic finance. So I mentioned to you about Islamic Development Bank, which is like World Bank, but it operates on principles of Islamic finance. It deals with the Muslim countries. It has, they have spent a lot of effort in developing this industry, and they are one of the key stakeholders in establishing this as a whole ecosystem. IFSB, Islamic Financial Services Board, which was established, I think, in 2004, is based in Kuala Lumpur. And this is very similar to, function is very similar to BIS, Basel, International Bank for Settlement. So it's like a BIS, it's a standard setting body which sets the standards for many of the Islamic banking, capital markets, and insurance. And then IOFI, which was actually is older than IFSB, it is based in Bahrain. And the objective of IOFI is to define standards focusing on Sharia governance, accounting, auditing, ethics, and so forth. And then, of course, the World Bank, IMF, they have a stake in it. World Bank looks at the development aspect of financial sector, and so they're interested in Islamic finance. IMF looks at the stability aspect of Islamic banks, so they are interested in it. And other banks, Asian Development Bank, they all are involved in one way or the other one. International Islamic Finance Markets is a standard setting body, or maybe you can call them industry association of all the financial institutions. They are based in Bahrain, and they have issued a couple of standards. One of them is to a tri-party repo agreement, which is Sharia compliant, and which they have set it up. And I understand that now these days Turkey or Borsa Istanbul is trying to implement that standard. Now, then you have a international Islamic rating agency. Again, this is based in Bahrain. There are other ones, SIBAFI, which is all the financial institutions. And then there is actually a global university as well for Islamic economics and finance, which is set up by Bank Negara Malaysia, and which is based in Malaysia. And mashallah, has producing a lot of good research and some good professors and students. So there is quite a big, the many organizations. There is an institutional development of many of these institutions who are working in different countries to develop this industry. Just to give you an idea that IFSB has many standards. including risk management, capital adequacy, governance. So this goes on. It was more recently they have issued the core principle for Islamic finance regulations. This is very similar to the Basel core principles, and I think this is a very good thing. I think they just either it's in draft form or it was issued that it will give the idea of to the regulators and making the assessment of how good the financial institutions are. Then they had also revised the capital adequacy after the financial crisis, and they have made some recommendations. Some people have adopted these, some others are still not doing. Then they have some guidance on the supervisory review process. So they have available in detail. So in that sense, you could see that there are so much work has undergone in developing these standards and showing the regulators and supervisors that how to, in your country, in your jurisdiction, how to deal with this kind of institutions. These are the standards under development, which have they are looking at the supervisory review process. They're revising those things. Then they have many guiding notes and technical notes. These are also and a lot of effort goes in these notes because these are done through the public consultation with the stakeholder consultation and so forth. So these are all available. You can check on their website. IOFI, as I mentioned, that they have done these things. They do guidance notes as well. This is the list of all these. I think there are more than about 40 or 50. Which they have accounting standards, and these are very detailed. They have shown, like for example, they show that how to treat for the zakah or the salam and parallel salam, mudarba financing, how to do the accounting for those, what are the issues, what are the auditing standards, now what are the governance standards, Sharia, especially they are focusing on the Sharia review, Sharia governance issues, and then they have done a code of ethics for accountants and others. So this gives you an idea of how comprehensive the coverage is. I understand that they are revising some of these accounting standards and trying to see if those can be incorporated or linked with IAS or FRS. So, I mean, they're all already working very closely with international standard setting bodies and with IAS and trying to see how this could be incorporated in those. So, these are all, a lot of effort has gone. I understand that I think they're translating some of these standards into Turkish as well, or it's already done probably, or the agreement was done to translate those, which are, again, is a very good thing. In some countries, what they do is, they do not adopt the standard just as is, but they do a little bit modification according to the local laws. So, for example, I know that in Pakistan, the local association of accountants, they have suggested that some modifications. They take this standard, modify this thing for their own local needs, and then they use those. Okay, for the the legal structures, there are kind of different practices. Either you have specific laws where you tell how to establish Islamic finance banking institution and these things, or they, in some countries, they are basically do not modify any banking laws, or they modify very minimum, and then within that, they, as a guideline or something, they do allow operation of Islamic banks. So there are different legal approaches. I think you have a full session on the legal this afternoon, so you will get a more idea of it. So far, for supervision, as far as supervision is concerned, most of Islamic financial institutions are pretty much supervised by the same same rules, same procedures. They're very, I'm not aware of any country where they have a dedicated supervision department separately for Islamic products, Islamic institutions versus other one. But that depends on each country's own circumstances and presence. Very quickly, I know we don't have much time, just to show you what is the different, kind of how there was a study done which shows you that they had a certain criteria to see how developed is the Islamic sector, financial sector in different countries, and that shows you the score of it. And in this score, the top is Malaysia. What they did is they looked at it from the governance perspective, awareness, the financial, the strength, and social, responsibility. So they were doing all these things, and they created an index. This was, I think, study done by Thomson Reuters. So they did this study. So you could see one thing you will notice, that Malaysia got the top score of 176, I think, out of total 200. Bahrain was the next one, which was 84. But you could see that the difference between this is almost more than the, almost 100 points, which is, more than 100%. Then they show you this index of the other countries, and you can see that Turkey did not make even on the top 10. And because the reason is that it is still evolving, there's a lot of work needs to be done, and I think, their governance and all these issues come into play. But that gives you an idea that Malaysia is way ahead in terms of defining the whole environment or ecosystem for Islamic finance, or Islamic finance or banking. This was a survey done by, I think, IFSB. They were saying that how many countries they have adopted IFSB standards, how many countries are in progress or planning and do not plan. So you can see that these are the different standards. This IFSB, I think, 215, and these are the capital adequacy. Out of the survey they did, I think 50% has done that. 50% has adopted this particular capital adequacy requirement. Some are planning. So overall, there's quite a good progress that many of these standards are being implemented. So which means that, this IFSB is working closely with the regulators, and regulators realize the importance of these standards, and they're gradually incorporating. I mean, we did some work with Turkey, and we did recommend them to adopt the IFSB standards as well, because this is good for the industry, and it will help promote the industry, develop the industry. This is talking about the adoption of IOFI standards. So this gave you which countries had adopted the Sharia standard of IOFI, which countries had done the accounting, and so forth. So you could you can look at these. I was talking about earlier how they had done the different in that index. So this is pretty much the same thing. It tells you on the regulation the score. It also again gives you top 4. Again, we don't see Turkey over here. When the governance comes, again, we don't see Turkey here. But even these countries, score of 54 is not very good, which means there's a lot of more work need to be done. Nevertheless, they're still, still working on it. Again, Malaysia is always on the top. Sharia governance, again, we don't see Turkey here, but mainly Bahrain, Malaysia have done quite a bit work, but other countries are still quite lagging behind, okay? Just to give you an ideas of these. Okay, with that, it's almost 10:30. We have a little bit of time. If you have any question, anything which maybe comes to your mind, let me know. Tell me anything. Any comment? How does it, Yes, please.
Up to when are we going to get the figures of 2016?
Sorry?
When are we going to get 2016 figures?
For what purpose? I mean, for which indicator?
For all main figures, asset figures.
I think this IFSB.
Balance figures.
Yes. No, IFSB IFSB stability report comes in May, month of May, and I think they publish the good kind of reliable. I think so available by May because they released it during the month of May. Okay.
Thank you.
You're welcome. Any other question? Okay. Well, if you don't have any other question, thank you so much for your attention, and I hope you enjoy the rest of the workshop.